Good evening, friends. This side Rahul Magan here is a Group Chief Executive Officer at Treasury Consulting and also a venture capitalist. Standing today on 2nd October, which is practically an Indian holiday, at roughly 2 a.m. in the morning, we are going to be covering a pretty important topic about what had happened recently in the interbank market as far as the venture capitalists are concerned. Well, we got multiple news as far as the venture capitalists are concerned, right? Number one, no news we got that recently there is a meeting which has happened somewhere in the US. I think it's Florida or San Francisco. I'm not sure about that because that location I'm yet to go. But my very key contact told me that in this meeting, without quoting the name, one of the very well-known private equity / venture capitalist firms, although we are again not quoting the name, private equity or the venture capitalist firm, they clearly invite over 100 startups, and they have clearly mentioned that we are not going to continue with that setup, basically that funding setup, provided provided you continue to be in the losses. Well, we got another news, I think 2 or 3 days before, from a SoftBank, basically the controlling person in the SoftBank, and he said that SoftBank has given a statement that we need to rethink about our strategy, or basically we will need to rethink to fill the dreams of the entrepreneurs if you are not profitable in nature. Now the talks have already started. People are thinking that we have to move to profits. Of course, we could have a separate video in that regards, but when I saw the Yes Bank annual report in the public domain, of course in the public domain, no intellectual property infringement, I got to know that they recorded a pretty hefty gain on the WeWork. Although, standing today in this video, I'm not going to discuss that much because I am doing my R&D. We are checking with the few venture capitalists that how people are doing the private equity accounting, because I doubt that there are few things which are happening in the private equity and the venture capitalist sector, and I'm pretty clear about that. I don't know how many people watching this video are non-Indians or foreign nationals, but if you know that India has again came up with a scandal, and that is PMC scandal, PMC Bank. Well, the list of scandals in the India is growing at a very exorbitant pace. You must be thinking that I'm discussing about venture capitalists, how the scandal in the bank is concerned. I wanted to link this scandal with the VC, which is that today we got to know that this bank, PMC scandal, opened 21,000 fake accounts only to supplement this scandal. 21,000. So what would, if the bank started making fake accounts to supplement the scandal, then who would be the regulator? Well, if regulator or the auditee itself started to cover up the scene, then what? Although this will not give an indemnification to the auditors about that, but nonetheless. Similarly, now have started casting doubt on the private equity books, the way they are doing the accounting, and I assure you that sooner doesn't mean 2 years, 3 years. Within 10 to 15 days, we are starting our series wherein we going to be talking about the private equity accounting, and we going to be taking all the information in the public domain and challenge that information with the best of knowledge we have of the private equity accounting. Because one thing I'm sure, I know there are many people do not like that, and we are yet to come to the main point. One thing I'm sure, which is that like in 2008, no one ever thought that world would face the financial crisis, but that happened. No one ever thought that there are a lot of incidences in the bank whereby the rigging did happen. We know that. And no one ever thought that. In fact, take the recent example when LIBOR transition was started. Actually, there was talk of about one alternate reference rate, and that was SOFR, which is secured overnight financing rate. And today, we have six people are actually fighting for one cake, and today the sixth person joined the party, which is ESTR, which is which is Euro short-term rate. In all these backdrop, what happened that there is a big nuclear bomb that fired in the interbank market, but our paid, incompetent and the sold media will never tell you about that because they are busy enough, and why they should tell you, and they have their own limits also. because they need to get advertisement, they need to be in the parties of these venture capitalists. You know what happened in all these parties, not to mention that. Anyways, Goldman Sachs started cutting the ties with the SoftBank, and that is a pretty bad news for the SoftBank. So as far as the Vision Fund starting is concerned, now their two topmost investors, both from OPEC, Organization for Petroleum Exporting Country. One is Saudi, which is I think is a Saudi Arabian Sovereign Wealth Fund, and another is also from basically OPEC, and both are almost withdrawn, and or alternatively diplomatically they said that their contributions would be modest and they would think to invest the profits. Well, where are the profits? God knows. We do not know about that. And today we got the news and the comment from the most visionary businessman of the globe, which is Vijay Shekhar Sharma, wherein he said that now he is going to be investing 250 crore in the travel business. So basically, first you started with the digital wallet, mutual fund, credit card, now the AgTech, and now the travel agency. I think I have told that for Vijay Shekhar Sharma, the last hope is the Chola Bhatura, because I'm sure that in the Chola Bhatura shop, it would surely be profitable. That I'm sure. Goldman started cutting ties with SoftBank, and that is a pretty bad news for the interbank market. You know, we are a data-driven company. We went to Google and we got the data from the interbank and also whatever limited information we have in the public domain. We got to know that Goldman, around a couple of years back, arranged $3.1 billion of a syndicated credit line for SoftBank. Well, this was not the only effort of Goldman. This was not the entire effort is not by the Goldman. As I told, it's a syndicated deal. Although I know not the public information which I have, private information I cannot tell you, but public information I have suggests me that it looks like a club syndicate deal. Although the private information, whatever I have, I cannot tell you in the public domain. So this credit limit, this funding oblique the credit limit was given by Goldman by two, which is Goldman and Mizuho Group. Well, it was syndicated by Standard Chartered, Citi, Barclays and Royal Bank of Canada. Now Goldman is doing something which I have never thought about Goldman, to be honest. Although I'm a pro Goldman, everyone know I'm a pro Goldman, but that literally made me discomfort when I got to know that Goldman selling its own piece in that $3.1 billion in pieces of 50 million each. That literally hurts me that amongst the largest banker of the globe, amongst the largest GIBs, globally systematic important banks of the globe, is selling their credit limit in this 3.1 billion part in pieces of 50 million. So for a minute, just for a minute, I assume that Goldman is having 1 billion part in 3.1. Well, I assume that at least 33% this Goldman is taking. It means that Goldman need 20 banks to sell this 50 million credit limit. I don't know how many people are competent to understand credit limit, how many people know how the club syndication deal works, in this club syndication deal, how the credit limit works and so on and so forth. We don't know. But apparently we should know that. Apparently one thing which we should be knowing pretty clearly is that Goldman needs 20 investors. And what would be the haircut, what would be terms and conditions, we don't know. Because these terms and conditions and haircut will never come in the public domain. And in fact, unfortunately, the reporting standard is also obsolete. So finding that information in the Goldman annual report is relatively pretty tough. I think it's not next to impossible finding that information in the Goldman annual report. But one important thing is that, which is a diplomatic thing, if you look carefully, that if Goldman is selling its stake, it practically means that other banks will also selling the stake. It's simple, pretty simple logic, that if you know the top two, I think the top operating system of the globe, the company who controls the, say, like take two example like Amazon Web Service. I don't think we need to explain what Amazon Web Service is and how much exposure and how much command the Amazon is having on the cloud. Let's assume something bad is happening in the cloud, God forbid, and Amazon is also not been able to resolve that problem. It practically means that if Amazon not been able to resolve, it practically means that the situation is pretty tough or tense. Why? Think alternatively. There is some issue in the mobile phone, some operating system related issue in the iOS or maybe Android. For a minute, let's assume, like take iOS, and Apple experts are unable to resolve this issue. It practically means that the issue is far severe if Apple experts those who have cumulatively 35 plus years of experience in operating system, they not been mobile operating system, not been able to resolve that problem. Similarly, if you take that connotation here, if Goldman is quitting SoftBank, it perfectly means that another banks are also quitting. So there is an issue of haircut here, that's for sure. Because if the leader in the iBank segment, whose name matter, you know that one MDB scandal was not possible without Goldman. If we exclude Goldman in the one MDB, then one MDB scandal is next to impossible. As simple as that. You do whatever, you take whatever back. You know, now the question is that two important questions emerge. The credit limit which Goldman sanctioned to SoftBank amounting $3.1 billion, whatever the public information we have, private I cannot tell you. Is this credit limit recourse? We don't know. Is it non-recourse? I again do not know. Is it sharing? I don't know. So Goldman selling its stake, it's in the pieces of 50 million, and that once again depend whether it is recourse, non-recourse or sharing. Whatever limited I know about Goldman from my personal experience and my contacts here, I know that Goldman never go for non-recourse. That's for sure. Goldman always go for recourse. Now what kind of recourse, what are the content we have, what are the agreements they have, what are the haircut provisions they have, we don't know. But Goldman is cutting ties. Then we got a news that WeWork decided to pull off their initial public offer, which is known as I think S1 listing in US parlance. They decided to they pulled off S1 listings in the US, which means that they are not going for initial public offer this year. Although the names are not yet in the public domain, but my private sources in the US suggest that there are 2 or 3 more startups who are about to list within this year. They are also almost called off. Basically they are listing after whatever happened with the Uber, with the Lyft, with the Smile Club, and now with your so-called Peloton. Now the question is that if Goldman will cut the ties, this would surely have an impact on the credit line in the interbank market. I am damn sure that majority of the private equity and the venture capitalists would surely have the credit line from these big boys, which is Goldman, JP, Citi, Standard Chartered, UBS, Barclays, HSBC, ANZ, Westpac and all. But getting that information in the public domain is very, very tough, because even if you look at the annual report, you will not get to know. You need to scrutinize the whole annual report, and finding that information is relatively pretty tough, to be honest. But I am damn sure that if Goldman has given roughly $3.1 billion of credit line, then almost every bank, every big boy must have given some or another form of credit line to the some or another kind of VC. But finding that information is relatively very tough. Then we move further on the Google, and we got some stark realities, very stark realities. Once we started looking at the SoftBank annual report, and this information which I am giving is 2018 information. I once again take an indemnification. This is 2018 information. 19 information is yet to come and not in the public domain. But if we get, we will surely share. We never take data which is confidential. No intellectual property infringement, because we are a Singapore-based company. We take the data which is in the public domain. Now the question is that the total fair value of the SoftBank investment is $82.2 billion. Practically $82.2 billion, on a flatter note $82 billion. But this is fair value. How much is the original acquisition value? I not got to know from the whole presentation. But I tried myself very well. Although I take an indemnification that I was having little time to read that whole presentation of 78-79 pages, I will try again as to have more information. But the fair value of the SoftBank is standing of all 81 investments worldwide, 81. All 81 investments worldwide, they have the fair valuation of roughly $82.2 billion. Another problem which comes that SoftBank and the Delta, their Vision Fund and the Delta Fund recorded a gain of $3.92 billion, in which the substantial portion is the unrealized gains. I don't think that the experts like you require my help to define the unrealized gains. But the biggest problem which I saw is when I was scrutinizing the presentation, I got to know that a very hefty amount was recorded against WeWork as an unrealized gain. Now the question is, I appreciate it was 47 billion in February, March somewhere. Now it is less than $5 billion. Would SoftBank take the hit of WeWork in their books? That's a big question. The reason is that if I look at that, I will get to know that this year they recorded the gain in the SoftBank Vision Fund is roughly 3.92 billion plus Delta Fund, which is 67% higher than on YOY basis than 2017. That's pretty strategic information. If WeWork IPO will not happen, and there are a lot of talks happening on the social media which confirms that landlord in London and US Manhattan, they have started renegotiating with WeWork about their lease contract. And the talks also started that one of my very good friends in Singapore told me that WeWork is about to fire a very hefty amount of people, or they are on a cost cutting drive, and this time they are doing almost every kind of cost cutting what possibly they can do. And there is no light at the end of the tunnel whereby they are anyways get any short or long form of funding from any investment bank. Whatever limited information comes suggests that they are in touch with Goldman and JP together to get $3.1 billion of collateral loan. But I don't know from where the collateral will come or whether the JP and Goldman will give $3.1 billion to a company whose rating has already been more or less junk and the yield is over 10%. Tomorrow we again have a look on that yield and we will confirm to you. To cut the long discussion short, time has come for the following. And I know that most of the people do not agree with me, like 5 months or 6 months before when I shooted the video about the Ponzi scheme on the YouTube, I got many dislikes, but that doesn't matter. Had I worried about that, today we know that WeWork is defaulted. Not defaulted, is more or less a defunct company. They don't have the money. Well, we have a lot of startups in India in whom we have the stake by the Canadian Pension Fund, by Goldman, Sequoia and all. We also know that Goldman venture capitalist firm is started taking the strategic positions in India. Like we earlier reported that the private equity players are taking pretty aggressive strategic position in India, and almost 100% real estate portfolio of the India Bulls is in the hands of Blackstone. Brookfield is also pretty aggressive. A lot of these things are not reported in the media. And Goldman, we see, if I'm not mistaken, I'm forgetting the name of one company, they have invested again heavily in that company. So all the foreign players have started investing in India heavily because the valuations are pretty deep, pretty cheap valuation. Our media, our government agree to this or do not agree to this, that is not a problem. Moral of the discussion is very clear, that these venture capitalists, especially the SoftBank, who took the mistake of not running the bank, rather running bank as a VC, is now paying a hefty price for that decision. The failure of WeWork would surely have a deep impact on the private equity accounting, but at the same time, we cannot say that the books are not crooked. Because in 2008 also many people said that banks are sitting on trillions of derivatives and they must have some base over that. What did happen in 2008? Trillions of derivatives were lying on an equation which is more or less worthless. And we got a Hollywood movie which is Margin Call which confirmed that. Our movie is yet to come. This is how it is. So things are changing at a very faster pace in the venture capitalists. 2 to 3 years before, when this situation looks very rosy, every youngster who was having a laptop or having an app was able to sell his dream and able to get several $1 million of funding without knowing where he stays, what is his age, whether he would be able to make it or not. But now the scene is relatively pretty tough, and I am sure the way the scene is going on, sooner or later the credit limits will die. SoftBank will raise their hand. If not raise their hand, they will fund to pretty selective people. But things are in mess, that is for sure. With this, we thank you very much. Have a great time. We do have a venture capitalist WhatsApp group where we discuss a lot about venture capitalist stuff on WhatsApp. If you think you wanted to join, you're most welcome to join. We hold our own VC fund in Singapore and India, which is pretty decent coppers, and that the company is managing. We hold a lot of training programs. If you wish to join, you can join. And my mobile number, which is 0091, which is an Indian code, 9899242978. 9899242978. Our fixed income platform, www.fixedincome.global. And I repeat that our venture capitalist acceleration desk is on the way. Have a great time.